Hi, I'm Al from the Money Study, bringing you another episode of our Take 10 Challenge, number 75, all about teenagers and money. This is our disclaimer for all about facts, figures, information only. It's not advice in today's video. Teenagers and money, what a combination. Look, in our previous session, we were talking about helping our younger children understand money, and to me, it's just a continuation. We just try and help our children at all ages to get on top of this thing called money. And teenagers at that age where they believe that they need to be dressed accordingly, many of them, they have to have the latest gadgetry and so forth, becomes a bit of a nightmare. And it's hugely important that we can guide them through this period to get them set them up for life, to ensure that they really understand what it's all about. It's quite fascinating when you see your children finally hit adulthood and the realisation that there's no fairy that puts petrol in our car, and that these insurance things, these bills come in every year, and so it goes on. Cost of living, as things start to, we incur bills as we get older. Probably the phone plan. Look, it's probably one of the most things that the teenagers are exposed to these days. They've got their mobile phone, and whether you're paying for it or whether they are indeed working and trying to pay for it, which is obviously possibly a better scenario. But either way, it really is important that they understand the true cost involved in having that mobile phone. I mean, obviously, phone contracts have become a lot cheaper than they used to be, and obviously, getting an unlimited amount could be quite okay. But still, it needs to be pointed out to them, especially if you're paying, that this is costing you X dollars per fortnight or month, and exactly what the contract is all about. So understanding the contract, if they didn't just purchase the phone, if they did get a phone with a contract, sort of breaking it down to show that the phone, really wasn't cheap when you compare how long you have to be on this particular contract for. And if you've done a bit of research showing what other contracts could be, you could sort of basically indicate that perhaps, the phone was not free. Bank accounts, obviously, we talked about bank accounts in earlier sessions, and I think it's quite important that we can sort of relay this information onto our kids. That if they've got a bank account, and because most of the teenagers are pretty savvy technology-wise, then normally they don't even really need to have an everyday type savers account, one that they can withdraw money. Most of them are going to be doing it by electronic funds transfer and so forth, except for those occasions they need a bit of cash perhaps to for their friends or something like that. But yeah, look, it's a case of looking for good online savings accounts, and ideally, if we can steer them towards a progressive saver type account, one where so long as a certain amount of money, it might only need $10 a month or so going into the account, but they don't touch it, they actually get a higher sort of interest rate. Pointing those sort of things out can sort of try and help them develop a bit of a better savings regime. If they can see that they put money in on a regular basis but don't touch it, they're rewarded for it, and hence they may need two bank accounts in that sort of scenario. But look, it is a case of ideally guiding them, providing them with some sort of a budget planner, so that they might only have about 2 or 3 bills apart from their phone bill or something like that. But it is a case of, if they do have their own car at 17, who's paying the insurance, who's paying the registration, where's the money coming from, all of these things. Sit down now, with them as these bills start to arise, that then they know, there's no sort of surprises later on. If they're paying for it, they better have that savings account working flat out to be able to pay for it. And I'm not suggesting, that you shouldn't pay it, but a lot of ways I think that, they start to realise early that, when you get these things, there's a cost and someone's got to pay for it. The point of starting to talk to them about mortgages, I think, is a good one, because kids, at this age, probably a bit too young to really start worrying about a house, obviously. But you'll get a few that got that sparkle in their eye that they realise that that's what they're going to do later on, or even have 15 investment properties or whatever. But it doesn't hurt to explain what a mortgage is, even at this age. So they've got a bit of an idea where they're headed, and explaining to them that, yep, bigger the deposit, the smaller the loan, the smaller the interest over time. So outlining, showing them perhaps a mortgage calculator as far as what the amount of interest payment that would be paid. And we'll be doing quite a few sessions on mortgages coming up. But it's really the point is that the cost of living, understanding what chunk of your net income disappears in mortgage payments. Kids can sort of see, oh yeah, mum and dad have, I know that he's a such and such, and my mum's the such and such. They must be on good money. Then they should have plenty of money to give me. But if it can be explained that, yep, you've got a nice house also, and there's a $600,000 mortgage against it, then the repayments, so 40 odd thousand or whatever they may be, is a one big chunk coming out of the net cash flow. So understanding that cost of living, and of course if your kids are going to private school or something like that, probably not a bad idea to point out exactly how that's affecting the cost of living for other things. Having them have some income, and I certainly encourage them to get some sort of a little job somewhere. Doing the old McDonald's thing certainly can give them a bit of an idea that perhaps they might want to aim a little bit higher later on in life, but understanding that, yep, you've got to be there at a certain time, you've got to turn up, you've got to do your job, and then that money that you've worked so hard for can disappear quite quickly when you're using it to pay for things that perhaps you don't even want to pay for. But good reality check from that point of view. And look, guiding them, and that shopping for bargains shouldn't be embarrassing. Do a bit of research. Even if it's a case of if they're embarrassed about looking around in the shops, perhaps get them to do their research online so that they know when they head out to the shops they're actually getting a good deal. Explaining what the difference may be of an extra 10 or 15% discount on something, that's money that can be applied elsewhere. Credit cards, debit cards, look, keep them away from a credit card. There's no doubt about that. So literally, obviously, we're talking, debit cards, ideally, but cash, probably not a bad way. I do like cash for younger people, as I say. It's tangible. They can see it disappear, and it gives them that ability to sort of picture, yep, it's running out. So cash is certainly, to me, still got a place when we're talking to younger people. But anything to do with credit, it's a case of, I remember as a teenager playing in bands and desperately needed the equipment that I needed, and said to my dad, look, you get the loan and I'll pay you back with me working from the music and so forth. Yeah, sure. But it was a case of really understanding, again, credit, that comes with an interest payable. And so it's not just the fact that you might have bought a $2,000 keyboard at the time or whatever it might have been, but it's the fact that by the time you paid it off over 2 or 3 or 4 years, that thing could have been almost double the price, depending on the interest rate that you had to have applicable for it. If they do get their first job, yep, sit down with them when they get their first pay slip. I guarantee a lot of you don't even understand your own pay slip, but look, I really strongly suggest you do understand how a pay slip works and what all the numbers mean. Look for any sort of anomalies in that regard. Are they actually paying the correct amount of money in super? Are they getting the tax-free threshold? Did they fill out the form to claim the tax-free threshold, the first 18,200 of tax? any tax should be tax-free. If they filled out the form, then they don't have to pay the tax. If they do, they've got to pay the tax and then claim it back later on. So read their payslip, read it through, see what's going on, and point out the difference between a gross income, what is tax all about, explaining, that it may not be obvious, but it's, paying for those roads you're driving your car on, and pays for the library they've got to go and study in, and so it goes on. But yes, explain the difference between gross and net, and even looking at the tax brackets, probably not a bad idea to educate your children. Certainly on superannuation, explaining that yes, this is for your retirement. You can't just dismiss your retirement. And you may think, tell them that 40 years is a long way away before you're thinking about retirement, but it will happen. And if you don't start earlier, then it becomes a bit of a problem later on. So just explaining what super's all about, and just steer them towards our little videos if you want more information for them. But the co-contribution is something that you might better get a bit of encouragement from, whereas as we talked about this, where literally $1,000 can go into a super fund. If they're earning some money, they're going to do a tax return, then yes, they will get that matching from the government. Go onto the website. Again, you can go back to a refresher on that co-contribution video I did, and you can get some more information on that. We've already talked about online savings accounts, but yes, making sure they understand about transferring, risks involved, scammers, all the things that do with anything to having a bank account and moving money around. We've got the situation, we've talked about sort of doing bargaining, but it really is a case of, before they're going to purchase some big product, say perhaps their first car, that they really do a lot of research, do some comparison, not just on price, but on features. What are they paying for? That money, there's quality that needs to be taken into account with purchases as well. If you're planning an event together, perhaps there is a case that depending if it's something they really want to do, that, there's some sort of we'll help you go there, do it. But effectively, you're going to have to come up with some of the money. We'll stump you up, we'll subsidise you to a certain degree. But anything like that, I really believe that there should be some sort of work involved. Do this, do that, and we'll help you out with the money, so that they realise that money is earned. Money is earned, doesn't just appear. Shopping lists, so even of the groceries, get them put down what they would like. But if they put down some really extravagant sort of luxuries, pointing out to them that, look at the cost of this compared to what aren't we going to buy off our shopping list, that they understand, gain, value, compromises, things that you can't have everything you want. Criticise advertising. You sit and watch the telly, the advertising comes on. Basically, use it as a discussion point to literally sort of pull things apart, saying, well, all these the false look, the fancy people driving around in whatever it may be, and trying to produce this image that really isn't reality. So sort of it's a case of do you really need these things? They're trying to create an image. Is that the image that you want? And what's an image all about? Really just use that time, that 5 minutes in between your program, to pick the advertising apart. And suggestion, if you hadn't even seen the advert, you probably didn't even know the thing existed half the time. And of course, if you've got a child that's got a bit of an entrepreneurial flair, they're the ones that always want to go outside and have a lemonade stand, or sell stuff on Gumtree or whatever the case may be. Don't stifle that sort of spirit. A good entrepreneur with the right brain, the right courage, and the right experience behind them, with a bit of help, could obviously go do very, very in the world indeed. So it's just a case, as parents, please guide them. Don't just switch off. Don't just say we can't afford it. That's not an answer. That is not an answer. explain, yep, the mortgage is 48% of our income, net income or whatever. Sit them down so that they learn. Don't just abuse and tell them it's not possible. Okay, good luck with that, and we'll talk to you again on another session.